This is a podcast from the Business Times.
Have you invested in Bitcoin or any cryptocurrency? Investing in Bitcoin is now so much easier, thanks to Bitcoin spot exchange traded funds. No worries about wallets to which you may forget the password, or the risk of unregulated exchanges, which may be mismanaged or become insolvent. Welcome to Wealth with BT. We're going to talk about Bitcoin, and I have a guest with us who will help us all understand how exactly do you value Bitcoin? What is the outlook for Bitcoin's price? And what place does it have in your portfolio? First, just a little background on Bitcoin ETFs. While there are already some ETFs linked to Bitcoin futures contracts in the US, spot Bitcoin ETFs, which hold physical coin, are pretty new. They were approved by the SEC in January and are already attracting strong inflows. This year alone, up to mid-June, more than $15 billion has surged into spot Bitcoin ETFs. With the ETF wrapper, I think crypto has something of a toehold in becoming mainstream. Bitcoin has become so much more accessible, not just for individuals, but also institutions. You can trade in small amounts with less fear of the counterparty risk of unregulated exchanges. What's more, the managers of the ETFs are very well-known traditional asset managers like BlackRock, Fidelity, and Franklin Templeton. And now the SEC has given the in-principle green light for Ethereum ETFs, so you'll have yet more choices of crypto exposure. But please note, while Singapore investors can invest in Bitcoin ETFs through brokerages here, there are some potential tax implications in US-listed ETFs. There's no withholding tax because crypto doesn't pay an income. But there is possibly US estate tax, even if you are not a US citizen or resident, and also capital gains tax. It's something to be mindful of. Our guest today is Chang Wei Liang, FX and credit strategist with DBS. Wei Liang holds a Master's of Science degree in Economics and Finance. He believes in rigorous analysis as the main way to advance knowledge. Welcome to Wealth with BT, Wei Liang.
It's my pleasure to be here today.
Please fill us in. How long has DBS and you been covering crypto as an asset? I ask because many big banks have remained silent on it until pretty recently.
So DBS research team has been covering digital assets since 2020. And we've seen in the last decade, Bitcoin has grown from a mere novelty to having a market cap of average $700 billion over the last 3 years across both up and down cycles. So if Bitcoin is a company, it will be among the top 10 largest by market cap. So this is a phenomenon that we at DBS and many other financial institutions can no longer ignore.
So I'm going to put you on the spot. Have you yourself invested in crypto?
So for me personally, I have no interest in Bitcoin or crypto because as a matter of policy, I am not able to do so. But I do follow the developments in the Bitcoin space very closely as part of my job. So I'm pretty equipped to answer questions that you have on the Bitcoin.
So here's a question that has vexed both investors and analysts. How do you value Bitcoin and what valuation approach do you favor?
So you're quite right that the question of valuation is a vexing one because Bitcoin cannot be assessed in a conventional way. It doesn't promise any future cash flows like stock or bonds. It doesn't have any industrial use like commodities. So ultimately, Bitcoin depends on demand as the supply is fixed. So to understand Bitcoin's value, we must understand the reasons why investors are holding Bitcoin at such high valuations. And to me, it's because Bitcoin represents three big classical economics ideas, and that makes it very attractive for investors. And these three ideas are, firstly, Bitcoin can potentially be sound money Second idea is that there's an invisible hand mechanism that's useful for settlements, and people like the fact that there's no government control. And the third reason is the fact that it provides a freedom of choice to people. Do they want to use fiat currency? And if they do not want, they have the alternative in the form of Bitcoin. So what is the role of money? It serves as a medium of exchange in transactions. It acts as a store of value over time. But money is ultimately a contrivance for the convenience of people. Right? It does not necessarily depend on having any specific physical characteristics, such as being a lustrous metal. It does not necessarily have to be issued by governments. And, if you're all stuck in an island and everyone agrees that animal fur should be used as money, then it is money. So if Bitcoin gains acceptance, social acceptance, as a private digital medium of exchange across borders and communities with reasonably sound value, it can be considered as internationalized money. So on the blockchain, there are now 46 million Bitcoin wallets with values exceeding $1. And over the last 3 years, the number of Bitcoin transactions has ranged from between 100,000 to 700,000 per day. There are over 6,000 merchants globally who accept Bitcoin for payments. So Bitcoin's potential to become accepted as money cannot be discounted by investors. The other important characteristic for Bitcoin is that its lifetime supply is fixed, and no single party can change this. Under the fiat money system, governments control the money supply. Bitcoin, unlike fiat money, does not rely on the wisdom and competency of the people appointed to manage the money supply. And the second idea behind Bitcoin is that it works as though there's an invisible hand managing its transactions. So blockchains, which Bitcoin is based on, is a decentralized mechanism invented to solve a coordination problem under uncertainty. But solving this problem also solves the problems of credibility for money settlements, which is the killer app for blockchains. So under the traditional monetary system, banks must hold reserves of gold or central bank money to back their liabilities and to perform settlement functions. There are always fragilities in such a system that could arise due to a lack of trust, a lack of reserves, and so on. And this will always linger in the back of minds of users of fiat money. With Bitcoin and the blockchain, there is this invisible hand. It does all the work behind money settlements in reliable fashion. And indeed, it's not from the benevolence of the blockchain miners that we get a credible monetary settlement system, but from their regard to their own interests. Bitcoin is an elegant idea that sidesteps many problems in traditional money settlements and their clunky solutions that have value in that sense. So the third idea Bitcoin brings to the table is that people are free to choose what form of money they want. While fiat money is stable today, does that mean that its value will continue to hold out in the many years ahead? So between wars, pandemics, financial crisis, sovereign debt crisis, who knows what the future will bring? Bitcoin being available as a choice for people to use in transactions can improve consumer welfare, and it provides insurance value against the uncertain monetary circumstances over time. So Bitcoin does not dictate that it must be the only private currency to be used. So here I will quote Friedrich Hayek, who is a famous Austrian economist who believed strongly in a competition of privately issued currencies back in the 1970s. And today, Bitcoin and its many cryptocurrency peers have realized this vision by fostering a spirit of competition, innovation in digital currency space. They have brought about increased efficiency, lower costs across remittances, and also resulted in new decentralized applications that are not possible with traditional money. How do we put a price on all this? Perhaps we can't.
Okay, so I understand what you're saying. I need to drill down a little bit more. You talked about demand and supply. So I want to get your thoughts on Bitcoin with a medium to longer term view, because Bitcoin has risen more than 4 times since the start of 2023. So investors will be thinking, is this a bubble? And going forward, what do you see as the major price drivers or detractors?
So without making any investment recommendation in Bitcoin, I would like to share some thoughts around the factors that influence long-term Bitcoin prices and whether or not it could potentially be a speculative bubble. First, I would say that in Bitcoin, it's completely supply inelastic. So it's unlike any other commodity. So over 90 million Bitcoins have been issued out of a total supply of 21 million. So there's not a lot more out there to be mined in the first place. And what's more, every 4 years, the Bitcoin reward for successful mining falls by half, and the most recent halving has just occurred in April this year. So as supply growth falls due to halving, a constant growth in demand will only lead to shortages, so that would argue for higher Bitcoin prices over the long term. Second, Bitcoin, as you have mentioned, has become more accessible to investors today with the introduction of spot Bitcoin ETFs in the US. There's also growing institutional interest in Bitcoin across the world, and Bitcoin ETFs could bring new inflows from investors who were previously constrained to hold listed securities. They cannot hold Bitcoin. So these developments should bring about more liquidity, more transparency, and ultimately should lower risk premiums for Bitcoin markets. And all of these are positive for Bitcoin prices over the long term. And the final point I would add is that Bitcoin can be considered as similar to gold in serving as an insurance against losses in fiat money. We know the market cap of Bitcoin is around 1.3 trillion US dollars today. And the market cap of the gold stock is actually 10 times higher at 15.6 trillion US dollars. So if Bitcoin and gold are increasingly viewed as fungible or equivalent by investors, their relative prices will need to adjust such that both assets have the same market cap. So that means Bitcoin still have room to rise a lot more over the long term. But even with positive long-term factors, I think it's important to stress that the volatility of Bitcoin is one of the highest across any asset markets. Large drawdowns in Bitcoin prices can and do happen, so there are both risks and opportunities to be aware of.
We've just been chatting with Wei Liang from DBS. In a few moments, we'll be looking at the pros and cons of a direct investment in Bitcoin versus an ETF. What are the risks of either mode? And where does Bitcoin fit in your portfolio? More on these issues after the break.
The Business Times podcasts. Relevant, incisive, compelling content by some of the newsroom's most respected correspondents in markets, wealth management, and current affairs. Available on all your favorite audio content apps and at www.businesstimes.com.sg/podcasts.
And now, back to WealthBT from the Business Times.
Welcome back. Wei Liang, please help us to size up the mode of investment. ETF or direct physical Bitcoin? Which mode has higher risks?
So I would say the risks are perhaps very small for both exchanges, especially well-regulated exchanges and ETFs. But there's a difference in ownership. Direct investment in Bitcoin through an exchange means you get a full ownership right. You can transfer, you can store, you can use the Bitcoin in any way you want. Investment with Bitcoin ETFs is just getting a security with exposure to Bitcoin prices. It is a completely different thing. You are not going to be able to buy coffee with a Bitcoin ETF as you could with a Bitcoin. Furthermore, people may view ETFs to be low risk, to provide diversification from their exchange wallets. But is that true? The fact is, 8 out of 10 spot Bitcoin ETFs hold all their coins in custody with the same exchange. So there is clearly a concentration risk, and it might actually be safer to spread your Bitcoin stash across different exchanges than just in ETFs alone. Finally, spot Bitcoin markets operate 24/7. Bitcoin ETFs trade only during the stock exchange trading hours. ETFs are also dependent on traditional asset market liquidity. If there's an event causing severe financial distress, like what we have seen in 2008 due to the Lehman Brothers collapse, do you want the assurance of being able to access liquidity over the weekend through your own Bitcoin holdings, or will you rather hold a Bitcoin ETF? Wait until Monday, where the stock market may or may not open, and market liquidity could be extremely limited due to financial contagion. So that's the difference in risk between direct investments in spot Bitcoin versus investment via Bitcoin ETFs.
Yeah, that's a lot to think about. You've talked about higher risk, but what do you see as Bitcoin's role in a portfolio? Some believe that they help to diversify from fiat currency, but its correlation with equity seems rather high. What are your thoughts on this?
So Bitcoin has indeed become more and more correlated to equities over the years, you're right. That's possibly due to higher participation in Bitcoin markets by professional institutional investors. The beta of Bitcoin is now around 1.8, which is quite a bit higher than gold at 0.3. So from this perspective, the portfolio diversification benefit of Bitcoin is not as much as gold. But tech stocks also have betas around similar levels, around 1.7. No one would argue that tech stocks should not belong to a portfolio because it has less diversification benefits. So prospective returns for tech stocks are still very high, even accounting for their highest beta or systematic risk. And to be fair, what is the reason for Bitcoin's higher beta? If you look at Ethereum, it has an even higher beta than Bitcoin at around 2.6. So my view is that cryptocurrencies have an equity component to them, as they can be used for new applications, which could drive up demand and provide upside to their valuations. The Ethereum network is more open than Bitcoin in terms of being a platform for decentralized applications, and this potential upside could explain its higher beta compared to Bitcoin. Similarly, Bitcoin has the potential for new applications compared to gold, and therefore it has a higher beta. So looking at correlations alone and the diversification angle is perhaps a bit too narrow.
I guess no one would argue that whether Bitcoin is a milestone in terms of Bitcoin ETFs, in terms of legitimizing Bitcoin. But what do you see as the future of Bitcoin and broadly other digital assets like Ethereum and even central bank digital currencies?
Right, to me, Bitcoin is a revolutionary idea. The invention of blockchain-based digital assets, of which Bitcoin is the most prominent example, offers the tantalizing possibility of tackling problems that traditional finance cannot address. So communities which have been underserved in the past due to a lack of trust may be the ones that could benefit the most from Bitcoin. For instance, a recent IMF study this year found that developing economies' usage of Bitcoin in transactions are actually higher than that of advanced economies as a proportion of their GDP. So this is a surprising development for me because developing economies are usually later in the adoption of new technologies compared to advanced economies. But this shows the promise of Bitcoin in supporting inclusion and democratizing financial access is not without substance. While Bitcoin is a revolutionary idea, I think central bank digital currencies or CBDCs are perhaps more evolutionary. So CBDCs, they are essentially central bank money. And central bank money has been used for settlement by commercial banks since the 19th century. CBDCs could be one step further to broaden the use of central bank money for settlement by ordinary individuals and businesses, or for governments to digitally track the consumption patterns of households for policy reasons. They could augment the capabilities of fiat money to meet the demands for a new digital age. They could provide a level playing field for digital payments providers, but they do not necessarily usher in new applications that have not been done before. So private money such as Bitcoin should continue to have mindshare, should continue to see rising adoption underpinned by the old classical economic ideas and the pushing of new frontiers in finance.
Thanks so much, Wei Liang. Sounds like crypto is here to stay. Thank you for dropping in and sparing some time for us.
Thank you for the invitation. It's my pleasure to be here today.
So, is Bitcoin a good investment? Personally, I haven't dipped my toes in, and if it comes to diversifying, maybe I'd prefer something more traditional, like gold. What's clear is that investment in Bitcoin is likely to be a wild ride. Given the robust surge recently, it'll be sensible to keep your risk exposure low and be prepared to hang on if prices move against you. I hope you've gained insights from this episode. Until the next time, thank you for listening.
This is a podcast by the Business Times. Find more BT podcasts at businesstimes.com.sg/podcasts or wherever you get your podcasts. This podcast is meant to provide general information only. SPH Media accepts no liability for loss arising from any reliance on the podcast or use of third parties' products and services. Please consult professional advisors for independent advice.